Hello, everybody. So today I want to talk about Tesla and specifically the Tesla layoff and the Tesla $99 FSD supervised deal. But before I do that, whenever I talk about Tesla, Tesla is a controversial stock. So it's important to set the scene, set the context. So let me just tell you, Tesla is a very special company. It is revolutionizing everyone's second largest consumer expense. If you don't live in a big city, transportation, your car, that's going to be your second largest consumer expense, after your house. The only thing bigger that could be disrupted, in my view, is the housing sector. So Tesla is literally number two, and therefore, I believe the valuation of this company could go to much greater heights than a lot of the tech firms that we have in the US. That's just for that, just because of what it is aiming at revolutionizing. It's literally the industry of the 20th century that is getting disrupted by this company, Tesla. And of course, people say, oh, this is a horrible company. In the comment section, oh, this is going bankrupt. Well, I just want to, set things straight. So of course, this company in late 2012, it was doing 550 million in sales. Today it does about 100 billion in sales run rate. So that's a 200 times revenue in 11 years. And the question is, for the next 10 years, how many times will it double revenue? 10x, to me, that's a guarantee. The question is more, are we going to see like a 10x in revenue or maybe a 20 or 30x in revenue? And if you look at the revenue growth for a company like Tesla, well, it's quite outstanding. You barely can see any revenue on that chart prior to 2014. It's the thickness of the line, right? So that's because it's experienced exponential growth multiple times. Now we've entered the period where sales for Tesla have been a little flat, and we'll see over the next few quarters they may be flat, but this is something they've gone through in 2018, late 2018, 2019, 2020. They've done that again. Will sales pick back up in 25 or 26? That is the big debate right now. And lastly, let me be honest with you and tell you about the performance of the stock as of today. So since the company started trading, the performance has been 40% average annual return, and that would be the fair assessment for this company. Now, of course, the media is not fair with a company like Tesla, and it is always blowing things out of proportion in order to undermine this company. And therefore, just to barely make a dent in equalizing it, I'm just gonna tell you the performance of Tesla taking the all-time high of Tesla, because of course the media takes the worst things about Tesla and makes it a fact and turns it into a permanent thing. So let me tell you the performance. If we look until the all-time high, well, all-time high, well, that was a 63%, right? If you were to look until the all-time high, if you think this asset will get back to all-time high, which, fair warning, I believe it will, we will get back to these returns. And of course, as we beat the all-time high, I believe over the long run, this is a company that's going to return closer to Bitcoin to me over the long run, closer to a 60 to 80%. I think we have perhaps a decade of this type of return upcoming for this company. Many think it's delusional, but that's okay. That's okay. That's the nature of disruptive assets, is when people don't understand what's happening. That's the nature of disruptive assets. And surely in late 2012, if you had said a company would 200x revenue and even survive in that space, you would have been seen as delusional. Anyways, not trying to make any predictions here. What I want to discuss today is the layoffs. So they've announced about 16,000 layoffs. So that's about 10% of the staff. And so to understand layoffs and why there's layoffs, I think we need to understand productivity in general and the role of robots in productivity. And mostly today, these robots are digital, right? Most companies implement generative AI type robots, which today we have language models which are still human driven, and we talk to language model. But of course, the future is action models, not language models, but actually these AI doing things for us. And sure enough, companies on the back end have these action models who will direct organizational resources just like humans do. And Tesla is actually known for having a really strong ERP system, really strong back end. Tesla also have physical robots in their factories, and these giant machines who are, mostly automated, and they're going back towards automation. They had gone away from automation back in the 16s and the 17s. Now in 2024, soon 2025, they're getting back into automation. So digital robots and physical robots enhance productivity. This is what we need to know. It enhances productivity, and it is enhancing productivity faster than before. Those productivity enhancements, they happen every year. And lately, they've been happening faster. So the company, the same size, same amount of employee, can produce more stuff. And this is the unfortunate part. There's some evidence, obviously, given the delivery numbers, there's some evidence that suggests that people are not upgrading their cars as soon as I anticipated, and many analysts anticipated. People are waiting. People are postponing new car purchases. It seems like a lot of people are not buying cars like I had anticipated. Now, we'll see if that changes with oil prices trending back up, because remember, one of the main solutions to high prices is getting an electric car. Oil prices kind of get cured by electric cars, but we'll see. For now, people are still postponing their car purchases, and so that gives some credence to Keynesian economics, which would say that, rates are high versus people are not going to buy. But to me, this is not what's happening, right? It's rates are high, therefore people are postponing their buys, not buying, right? They will buy. At some point, you need a car, right? You're not buying a product just to please a company and to be nice to that company. At the end of the day, you're buying a product because you need that product. And so interest rates are kind of irrelevant. You buy the product because you need the product. So the Austrian thinker in me says people buy cars because they need them. They need them. And so that means that any car that is not bought today will be purchased in 25, 26, or 27, right? There's a bunch of people who are keeping their car longer than they want or longer than they can. And that means that we likely will see pent-up demand in 25, 26. And this is noteworthy to say that this is a trend you see in the auto sector. That's why we have these waves, these sales of cars happening in waves. And maybe analyzing a company's revenue in the car business maybe is better analyzed on, say, a 1,000-day period or even a 5-year period rather than the typical Wall Street 1-year period. So people are waiting for the rates, for the Fed to take the rates down, and when the rates are down, they will likely buy. But you see, the reason why we have layoffs is because the firm, Tesla, needs to match the internal resources to the external environment, the external needs. And right now, the economic outlook is no good. So productivity is increasing. You're making more cars. You're outputting more cars with the same amount of people. And so the question is, productivity is going to keep increasing. So what do you do? Do you just produce more car and park them on parking lot like a lot of the legacy auto is doing? Or do you just produce less by adjusting your productivity down by laying off people? And I think that's what they are doing. And if you're sad about the layoffs and they're laying off because productivity is increasing, they're making more cars with fewer people and they're not making as many cars as they wanted. If you're sad about the layoffs, by the way, there's only one, and this is important to note, unelected. There is only one unelected official to thank, and that is Jay Powell, because now it seems like our July rate cut as of this morning is not even coming. So now we are talking about a September rate cut, and we will see if oil spikes in the summer. Who knows? Maybe it will be a November rate cut. Now, these people work a whole lot, which is why they don't meet in October and they don't meet in August, which is also why something they don't do. And of course in February too, because you gotta have 3 months off. So that's why we gotta wait for so long for the rates to drop. It really makes sense. But anyways, credit where credit is due is of course we gotta thank Powell too, because if you like cheap stocks like I do, I gotta thank Powell. As much as I hate to see layoffs and the economy really being awful, and maybe the price of my home really not going up too much on Zillow because of the economy is bad, as much as I hate that. Obviously, if you're an investor, your portfolio is going to be more important to you. At least it is more important to me, and I like cheap stocks. And so thank you, Powell, for cheap stocks. And it's kind of a double-edged sword. You got to thank him for the poor economy and the layoff, but you also got to thank him for the cheap stocks. So thanks for the cheap stocks. And I think Powell is going to succeed, by the way. He's going to succeed in getting us that recession. I believe we've been in a recession. So I guess what I call a recession, some would call a depression. So depending on how you define that, you could say that Powell has succeeded getting us into a recession, and he's going to get us into a depression. Or if you don't think we're into a recession, you may say, oh, well, Powell's going to finally succeed at getting us into a recession. Keep in mind that the definition of a recession has been redefined 2 years back. The President of the United States redefined recessions. So it's really up to you whatever you want to call it, right? It's up to you. It's not the BLS defining it anymore. But anyways, he's going to succeed in getting us that recession or that depression. And he's going to succeed to do that because when you raise interest rates, of course, companies have to do layoffs. They have to have more cash cushion. They have to pay off their debt. And you get things like no more family formation, people losing their house, divorce rates, and suicide especially, but all sorts of deaths, but especially suicide. This is a famous quote from the Big Short, which is a well-known economic concept, which is 40,000 people die for each 1% increase in employment rate, and that's kind of the humanist reason as to why we shouldn't have the Fed. The humanist reason as to why we shouldn't have one person control inflation and control the economy, which is an arbitrary number, by the way, because Austrians would tell you that inflation is not a thing. We should only have deflation because we become more efficient at making stuff every year, and thus deflation should be the only way to go. But because we want inflation, we have to create economic depressions, and of course, it's got a lot of drawbacks, including if you're one of these 16,000 people at Tesla who lost their job. Well, maybe you just bought a new house. Maybe you just got started something in your life, and you get that layoff. Well, it's not too good, and that's I would argue that is a direct effect of the Fed. The Fed also cut us off a bull run in Bitcoin. The point is, if you're a younger person, if you're under 60 years old, as bad as it feels, and we've had 3 years of madness like this for now. As bad as it feels if you're a younger person, over the long run, this is actually better for us. This is better for us because we get to accumulate more, and if you have a paycheck, you get to accumulate more. Going back to the theory, though, we're moving back to the theory. So I believe Tesla has to lay off because the demand's not there. The rates, they're going to stay high. Some people are even calling for rates increases even more. So people are going to keep postponing their cars. The demand's not there. And thus, the productivity, being how it is, productivity keeps getting better. Your number of people can't stay the same. If your productivity gets better and your number of people stays the same, that means you just pile cars on parking lots. And Tesla's not going to do that. They're not going to pile cars on parking lots. So the variable of adjustment is the human labor, the employee, the most flexible form of labor. That's the variable of adjustments. And by the way, as soon as the economy spikes back, which I think the economy is going to be like a coiled spring, it's been suppressed so long with its interest rates. As soon as they drop, and it seems like it would have to be a crisis at this point that's going to make the rates drop precipitously. As soon as they drop, the economy will spike back, kind of like in 2020, in early 2020, if you remember. And then maybe companies will rush to rehire some of those people. But of course, the people who will be hired will likely not be those who have been laid off. It will likely be new folks, new people who will be hired. So really doesn't help if you're one of the victims of these victims. I don't want to say victim. Companies do whatever they want, but it doesn't help if you are one of the person who get laid off. But eventually, and this is part of a larger discussion on futurism and what's going to happen to labor economics. Is labor going to be a thing in the future? It doesn't change the fact that, in my view, eventually, most firms will have little to no employees, and this is obviously, and this is why the media, the mainstream media, is kind of lost, because they say, oh, they're firing 16,000 people. That's a bad thing. No, it's not necessarily a bad thing. In the new world, that may mean that the firm has become so productive that it doesn't need these people, right? It doesn't necessarily mean that the demand is so low. It doesn't necessarily mean that there's been a drop in demand by 16% and you fire people because you have to produce less stuff. It doesn't necessarily mean that. It's a productivity gain too. So the future is, but yes, there will be fewer and fewer employees in firms. And the current CEO of OpenAI, now Elon Musk's kind of arch nemesis, they don't like each other nowadays. But the current CEO of OpenAI, in an interview a few months ago, he was like, oh, him and other big tech CEOs or AI CEOs are having a bet in their circles, saying which company will be the first company to have 1 billion in yearly sales being run by only one employee. And this is what can happen when you have large action models as opposed to large language models. You have action models where it's the AI actually running the company, directing the company, and then you end up just needing a CEO. Just needing a CEO that spells out the vision to the AI by having a conversation with that AI, and that would be the one employee company. They're betting on that. And the usual reminder, of course, whenever I talk about OpenAI and these concepts, is that who was a co-founder of OpenAI? It's Elon Musk. Elon Musk co-founded OpenAI. Therefore, we have an insider of this way of thinking at the helm of Tesla. And sure enough, everything is doing about the robots and the Optimus bot, sure enough, is walking in that direction, and he has a clear vision as to where we are headed and where the world is headed. A few more words I want to talk about, because the market, even some faithful Tesla followers are saying, oh, I'm really upset to see that some of the great leaders are leaving. And Andrew Baglino had been 18 years at Tesla, and so he's leaving, and he seems to be leaving in good terms, because Elon, thanked him on Twitter. You would be clearly leaving in good terms if you have such a public thanks. He seems to be leaving, and the reason stated is wanting to spend more time with family and young children. And ask yourself, would you do the same thing, given that he's like, and I don't know, I haven't looked that up, but he's likely a centimillionaire. He would have to be a centimillionaire. So if you had hundreds of millions of dollars, after 18 years, would you quit to spend time with your family? Well, maybe. And remember last year, it was roughly about last year when Andrei Karpathy left, that was supposed to be the end of the world, the end of Tesla. It was supposed to be the end of Tesla AI. Tesla AI has been doing just fine. It's been getting better and better and better, despite one of their leaders leaving. And I believe this is a bias of modern day popular culture. Our modern day popular culture, in my view, my humble view, tends to overemphasize the importance of good leadership, while actually what's important, in my view, is solid competitive footing. Are you in a solid competitive position, i.e., for example, selling cars in the 21st century? What would be the good footing for an auto company? Well, it would be a highly efficient, highly robot-driven, non-unionized company with only a few plants, with a powertrain that uses electric, that's about to get 2 to 3 times better in just a few years, that can eventually drive itself, and that doesn't use a network of dealership to sell the product, but actually allows you to sell the product online. The competitive footing that Tesla has is strong, as good as ever. And so In my view, this is why I'm not too afraid of even Elon Musk leaving one day. In my view, average leadership can do. I mean, you don't want dishonest leadership, and you don't want people stealing or anything like that. But if a company is so strong, you can have very average leaders, and the company can do so well. The best example I have of that is Tim Cook. Apple, depending on the time of year, is still the first or the second best company in the world, depending on the time of the year. And the leader, Tim Cook, I mean, I could make a case. He's a very average leader. He just executes, right? Amazon is kind of the same way. Lots of people are criticizing Andy Jassy, but he just executes. They're good leaders, but they're average to good. You don't need the best leader in the world. The founder is a different story. You found the company, you probably need the best leadership in the world. But to maintain a company already on strong footing, average leadership, in my view, does. But if the company has poor competitive footing, if a company is in the wrong industry, say take Blockbuster, could even the best leader have saved Blockbuster or Kodak? And the answer to that, in my analysis and my view of business today, is no. No, the best leaders can't save a company on poor competitive footing. But of course, this is a view that goes against much of a popular business culture that praises leaders and says, oh, it's the leader who does everything. Anyways, that's just my point of view. It doesn't really matter. They have the best applicants for every single job at Tesla, so they will be able to find a competent person to take over the work of Drew Baglino, in my view. And let me go back to human labor and finish quickly this conversation of human labor. So human labor is the most costly form of labor. And as a result of that, it needs to be the form of labor that adds the most value. And in a future where generative AIs do everything for us, and these AIs move from language models to action models, they do everything for us. In my view, the most important human labor that we will need is kind of experienced generalist managers. It's those managers who have a lot of experience in a lot of different areas of the firm and who can coordinate the different operations of a firm really well and coordinate these large AIs, these large action models, right? It's not going to be the expert user of Photoshop or AutoCAD anymore, or the expert user of, I don't know, QuickBooks or whatever, some HR SAP system. No, it's going to be the person who is a highly generalist and who has very good business sense. And I believe these employees are remaining at Tesla. My guess is that a bunch of these laid off are either people with highly specialized knowledge that is redundant by AI, made redundant by AIs, or simply people who work in factories and have been replaced by some form of a machine. And the benefit, of course, of cutting the labor is that these cost cuts, they will increase the cash flows, and the cash flows of the firm make it more anti-fragile. It allows it to take even more business from the competition by cutting costs and making the product even more compelling in a time of economic crisis. And this is what we saw today with the FSD news, or was it 3 days ago? Yeah, 2 days ago was the FSD news. So if you look 2 days ago, right, is the whole idea that they slashed FSD to $99 a month, down from $200, and this is very telling of a few things. First of all, I want to say the backlash that you saw on Twitter on that was a very, very mild backlash compared to the first backlash that happened when Tesla was dropping the prices of cars. People have begun to understand that consumer electronic prices always go down. That's the nature of consumer electronics. You're not selling an appliance whose price goes up over time. You're selling a consumer electronic products like a flat screen TV, and nobody goes complain to Costco or Walmart because they bought a TV 2 years ago and now the TV is 50% off, right? Nobody does that. And I think the consumer is getting used to the fact that, yes, technology is always going to be as expensive as it ever gets the moment you buy it. And the more you wait, the cheaper it's going to get. But at some point, I doubt few people are waiting to buy a flat screen TV nowadays because they hope it gets cheaper, right? They will always get cheaper. The same is true for software. The same is true for Teslas. They will always get cheaper. And this is an example of that. At $99, I think they're going to have a pretty impressive take rate, if you ask me. And just for fun of a calculation, so the best of what I can see is they have about 5 million Teslas right now that are new enough that they can run the latest version of FSD. So theoretically, if they got the $99 a month FSD on all of these Tesla, that'd be about $6 billion a year, so of profit, and that would be essentially just profit, because this is nothing but nets, right? Nothing but nets. And if you add a Tesla FSD, not FSD, sorry, Tesla Internet, right? Tesla connectivity, you add another billion on that, so $7 billion. So the current valuation, the majority of the valuation of Tesla today could technically be justified with a high multiple, be justified by just this. And how many people are going to get Tesla's FSD for $99 a month? My guess is quite a bit. In marketing, magic pricing, as we call it, right? When you're changing the number of digits, this is 2 digits and not 3 digits. Magic pricing really works. That's a psychological bias that we have, and I think a lot of people will be tempted to get it at this price. And, it looks to me like Tesla is setting itself up to become more and more like a SaaS company or a SaaS-style company. The whole idea is that you sell hardware once, such as cars and megapacks, and then you sell software forever. And that is, of course, what Microsoft now does, or most smartphones do that these days. They sell you a phone, but really they don't make too much money on it. They hope you'll be using the software on it forever. That's where the money is, and I think it's going to be the same for cars, for megapacks, for robots eventually when they are released. And keep in mind that that potential subscriber base is growing at a pace of about 2 million cars a year is the growth of that subscriber base. So this is a company, I believe, who is slated for major growth going forward as soon as the interest rates drop. And also the 8.8, and of course I've made a video about that too, but the August 8 robotaxi release, in my view, will also create sort of a permanent demand for Tesla's cars, in the sense that what we saw last quarter, where a few cars didn't get sold, right, or we're still in between delivery and manufacturing dates. I believe a lot of these cars will be able to just go to the robotaxi network and be put into service on the robotaxi network. So you're creating kind of an internal demand for those cars, and those cars would earn money by taking away business from Uber and Lyft, right? Which is part of a business. And the cars that Tesla doesn't sell, they simply can turn them into robotaxi. So that's kind of what all works together. Why they would launch it at 8.8. Maybe the car demand is a little soft. Well, if the car demand is a little soft in August of 2024, well, guess what? They can just build their robotaxi network and earmark those cars that are manufactured to the robotaxi network instead of selling them. So it kind of creates a basic floor under which they won't sell the cars, under which they won't go. And in conclusion, I am buying Tesla at these prices at $165 a year. I am buying Tesla. Yes, I am still waiting for earnings, right? But they won't come until next week. We still got a little bit of wait to do until the earnings, and who knows where the stock's going to be headed. The consensus, of course, if you go online, is that the stock's going to drop even more before earnings. But the other side of that story is what if it's priced in? What if it's already priced in? You can't really know. Now, I'm in an unfortunate situation where my Bitcoin position entirely outgrew my Tesla position. If you're a long-time follower of the channel, I always start my top 10 position, my best stocks video portfolio. I always started by saying Tesla is my number one position. I can't do that anymore. It's not the number one position. I am working on getting it back to number one, but it's not easy when you've had some Bitcoin-related stocks do a 5x in next to no time. So anyways, Tesla will get back there in my view. I am buying at 165. yes, Tesla could go to 120 or 130 after earnings, right? And sure, right now, if you see the price of 165, you see very serious people all over the web telling you, oh, it's gonna go to 130 after earnings. But guess what? Once it reaches 120 to 130 after earnings, what will very serious people on the internet with very serious charts, what will they start telling you? They'll tell you the 90s are next. And when we hit the 90s, when will they start telling you? They'll tell you the 50s are next. So at some point, it's just how I manage. At some point, I got to take a risk, and I'm taking the risk at 165. I like it at 165. I like it. I like the stock. I don't know what else to say. So it's impossible to know where the bottom is. I like it at 165, just like I loved Bitcoin between 15 and 25,000. I remember making videos on Bitcoin and buying Bitcoin between 15 and 25,000. And people would have thought I was nuts. I was crazy because, of course, everybody thought it was going to either 10,000 or to zero. And, of course, it didn't do that. So anyways, this is the conclusion of this video. This is not investment advice, no financial advice, just entertainment only. Appreciate your likes. I appreciate your subscribes. Follow me on X if you can. Thank you for watching and have a wonderful day.